Hello everyone. In this video, I'll be presenting a few very important facts, especially for retail investors in Vodafone Idea. Many of those who have jumped into Vodafone Idea or invested in Vodafone Idea very recently with an expectation that this share price is going to be a multi-bagger very soon and fly past the 20 rupees mark in no time and all. So just wanted to make them aware of certain important facts, especially related to the fundraising exercise that the company is expected to conclude in the next month or two. So please do watch this video till the end so that you get a very good idea of what to expect from the fundraising exercise and what we can expect beyond that. Okay, the kind of valuation that the company may achieve after that. Okay, so please do watch this video till the end. There are lots of before we reach that slide. I'll be presenting those the data on the next slide. But before we reach that slide, just have a look at the kind of positive news or rumors that are being bombarded about Vodafone Idea on various forums. Various forums where both traders as well as retail investors are very active. Okay, so these investors do get influenced by all these rumors bombarding happening on these forums, and they start believing these rumors to be true. But let me warn you, most of these rumors are not going to turn out to be true in future. Okay, it has happened in the past as well. So please, whenever you invest in a company, please do not believe such rumors. Most of those rumors are also about the fundraising exercise that the company is currently undergoing. Okay, people are expecting this share price to shoot up to rupees 20 levels based on this fundraising exercise. Some people are even claiming that the fundraising will happen at 25 plus levels. That's a big joke, I think. We will come to know in the next slide. Many people are also already assuming that the AGR dues figure will drop by 50+%. Okay, so we cannot assume that unless Supreme Court agrees to that. Okay, yeah, let's hope that it does happen, but we cannot start assuming it as of now. So as retail investors, we need to have realistic expectations of the current situation that the company is in and the kind of valuations that it can get from new investors. Okay, so now let's begin to the next, go to the next slide where I'll be sharing those facts. So these facts are basically about the fundraising that Vodafone Idea had done 2 years back, nearly 2 years back. So it was a rights issue back then where Vodafone Idea had raised substantial capital, around 25,000 crore rupees. Even now they'll be raising a good number of rupees, means around 15,000 crores in equity capital and another 10,000 crores in debt capital is what we are expecting. But back then in February March 2019 they had raised 25,000 crores via a rights issue, and the shocker was the price, a price of 12.5 rupees per share at a time when it was actually trading at little over 30 rupees per share on the day of announcement. I remember this price very well because I myself was a shareholder of Vodafone Idea on that day, on the day of announcement. As soon as I read about this announcement and the price that was announced, it was a clear shocker for most of us. The first thing that I did was sell out all the shares that I had at just over 30 rupees a share at that point, maybe at some marginal loss too. But considering this price for these huge quantity of shares, the price in the market was bound to go lower and lower and maybe closer to that level. That was my first expectation. So the first thing I did was sell out the shares at that price. Obviously, in that rights issue, promoters too contributed their share because they wanted to maintain their shareholding at near 75% level, the regulatory limit that we have in India. Now let's look at the business position that Vodafone Idea was in at that time. Okay, in March 2019, I think Vodafone Idea was in a much stronger position as compared to today. Firstly, it had a lot more subscribers compared to now today. That time it had more than 350 million active users compared to less than 270 million today. Even the quarterly total income figure, if you see, it was around 12,000 crore rupees back then in March 2019, whereas it is under 11,000 crores now in the most recent quarter, that is in the September 2020 quarter. The total income figure was under 11,000 crores. Even if you look at the 4G user base growth and the data consumption growth, both these things were growing much faster back in March 2019. I have the numbers with me, and which suggests that 4G user base was growing at around 5 million quarter on quarter at that time. Even the data consumption was growing at around 10% quarter on quarter. Today, if you see, the 4G user base has been more or less steady around 105 or 106 million mark for the last 4 quarters in a row. And data consumption also, which was growing until the June quarter, has reported a negative growth in the September quarter. So this is a clear, means not a very positive signal as of now. Okay, so I have been reporting updates about the company's quarterly results as well as monthly subscriber data in my videos on a regular basis. So please do keep an eye on those videos so that you get a very good idea of how the company is progressing on the business front as well. Now let's come to the most important point that was not there back in March 2019, but it is there today. Back in March 2019, there was no AGR dues, no pending AGR dues figure of thousands of crores. Remember, this Supreme Court ruling happened in October 2019, means the first time when this bomb actually fell on the operator's head. The AGR dues figure was of 50,000 crores plus figure for Vodafone Idea was came to know, known to all in October 2019. So in March 2019, when this rights issue happened at 12.5 rupees a share, there was no such inkling of these AGR dues, upcoming AGR dues of thousands of crores of rupees. Okay, so now if we consider all these factors, a stronger business position, a stronger user base growth and data consumption, and no AGR dues at that point, and still the promoters decided to price the rights issue at 12.5 rupees per share. Then today, when the business is in a much weaker position, as well as with thousands of crores in AGR dues, how can we expect the fundraising for Vodafone Idea to happen at a price higher than 12.5 rupees per share? So that's just impossible to as per my estimates. Okay, now let's look at some very important numbers. Today, Vodafone Idea's equity capital is almost 29,000 crore rupees, comprising of almost 2,900 crore shares at a face value of rupees 10 per share. The additional equity capital that the company is expected to raise will be in the range of 12,000 to 15,000 crore rupees. The issue price is expected to be in the range of 10 to 12 rupees per share. Now I have mentioned this is to be slightly optimistic figure, because considering the weak situation that Vodafone Idea is in currently, many of those new investors might even negotiate for a price below the face value price. Okay, so they might negotiate for a price below 10 rupees, but let's hope that the company does manage to achieve at least 10 rupees per share, maybe up to 12 rupees per share for the fresh issue of shares, for fresh capital raising. So the new shares to be issued will be in the range of 1,000 to 1,500 crores, and the total issue, means the total number of shares after this fresh issue, is expected to jump to around 3,900 to 4,400 crores range. Now this is a very large figure, very large equity base for any company, be it Vodafone Idea or be it any other company. This is a very large figure. And remember, Vodafone Idea currently is a loss-making company. It is raising this capital purely because it needs that funds for capex requirement, so that they can push for a faster revenue growth. They need to grow their revenues by at least 20 to 25% over the next 1 year or so. so as to achieve an operating break even. Now, when I'm saying operating break even means they should be able to cover all their operating costs, including their interest cost as well as the lease rental cost from their total income. Okay, so as of now, they are not able to do that. They are falling short of by at least a couple of thousand crore rupees every quarter. So they need to push for at least 20% to 25% revenue growth just to achieve operating level break even. Okay, just to achieve maybe a profit before tax level. uh, no, profit before tax will take even longer, but in the next 3 to 4 quarters, we can expect Vodafone Idea to be very close to achieving this operating break even. Hopefully, with this fundraising, they'll be able to grow at a faster pace. But remember, it's not going to be very easy. It's not going to be a cakewalk, as we can say. Jio as well as Airtel both are in a financially stronger position compared to Vodafone Idea, and they are not going to make it easy for Vodafone Idea to gain market share in the current situation, or they are not going to allow Vodafone Idea to grab their users easily. So Vodafone Idea will definitely have to work very hard to achieve even that 20 to 25% revenue growth from here on. Let's hope. I'm fairly positive that it will happen. It will hopefully happen in the next 3 to 4 quarters. But we'll have to keep an eye on the monthly as well as quarterly progress that the company makes. I'll keep sharing my updates as and when more and more data is available about the monthly and quarterly update performance figures. Do keep an eye on those videos.